Welcome back to The Real Accountant. Today, let's explore the world of assets. You might be surprised at some of the assets companies recognise and how we account for them. We know that assets are vital to the running of a business. You're probably familiar with more basic examples like machinery, buildings, or land. Companies hold these non-current assets for long periods of time and use them in their day-to-day operations. As they use these assets, they usually depreciate them to recognise the economic benefits they consume. But non-current assets aren't always so straightforward. Let's have a look at some of the more unique assets that companies recognise. We all recognise this logo, and at some stage we have most likely all used a Windows device and Microsoft Office. Big tech companies like Microsoft have registered trademarks and patents that give them the exclusive rights to sell and distribute the software they develop. If certain requirements are met, these rights are recognised as non-current assets. We can even see biological assets recognised on balance sheets. If a farmer has vineyards or orchards that they harvest produce from each year, or has a herd of animals, they might be able to recognise the value of their trees or even livestock in their financial statements. Now, you might be thinking, how would we recognise these items? What value could we assign to a herd of dairy cows that produce milk? Would we be able to estimate a residual value and useful life and apply straight-line depreciation to a tree? While we have specific accounting rules that help us out here, there is still plenty of judgment and choices that accountants need to make. Another important issue at the moment for accountants is carbon accounting. As the world moves towards more renewable energy sources, we are seeing governments around the world introduce new programs like emissions trading schemes. Simply, these schemes work by forcing companies to buy credits which give the right to emit greenhouse gases into the atmosphere. If companies are made to pay for pollution, we should see less of it. Another way to earn credits under some of these schemes is through activities that remove greenhouse gases from the atmosphere, like planting new forests. This raises the question, how much carbon can one tree remove from the atmosphere, and how much is this worth to a company? This could be a very important factor in determining the value of our biological assets. We don't have clear answers here yet, but these are the kind of questions accountants are wrestling with in the real world today. Even when we consider some of the non-current assets you might be more familiar with, we can run into a lot of complexity. Take the example of a manufacturing company like Apple that would use machinery to manufacture phones and other products, and would recognise this machinery as a non-current asset. Now, you might think that the accounting here will be fairly straightforward. If we know the initial cost and can estimate the residual value and useful life of the machinery, then we can calculate a yearly depreciation expense and use either the straight line or reducing balance depreciation method. But what if something unexpected happens over the machinery's useful life? We might expect to use it for 10 years, but in 2 years' time, maybe phone designs will radically change and the machinery becomes obsolete. Maybe Apple could decide to upgrade the machinery, allowing it to produce new phones, or maybe it could sell it off to a competitor. Any of these events would change our estimate of residual value and useful life and change the amount of depreciation we would need to recognise. Without the ability to see into the future, we need to make a range of judgments and choices as accountants. And if they turn out to be inaccurate, this can have a big impact on our measurement of the performance of the firm. Accounting judgments and reports aren't just about the past, they are forward-looking as well. That's what makes them so important and useful, but also so complex. we can see that accounting for assets is not always a straightforward task. Companies can have a whole range of unique assets, and it's up to you as an accountant to decide how to recognise and measure their value. Thanks for joining us. Make sure to like and subscribe for more real-world content, and we'll catch you next time.